Welcome to Dentist Puns and Money. I am your host, Shawn Terrell. Dentist Puns and Money is brought to you by Dentist Exit Planning. At Dentist Exit Planning, we help dentists within 5 years of leaving clinical practice build their financial treatment plan for life after dentistry. Part of that financial treatment plan usually involves investment accounts or money in the market. And since the market has been so volatile lately, as I record this in early April of 2025, I thought I would use this podcast as a chance to offer a few of my thoughts on the recent market volatility, just in case my perspective helps someone else's perspective in some small way. So a couple disclaimers before I get started. Number one, when I talk about the market, I'm talking about just the market in general, like not any specific funds or anything like that. Most people have money in their 401k or their profit sharing plan or different IRAs or brokerage accounts. And in those accounts, there's underlying funds that they're actually invested in. But I'm not getting into any specifics about those funds. I'm just saying that most people log in, they can see what their account balance was last month or at the end of last year, and they can see that it's gone down quite a bit recently. So just in general, talking about that. Number two, this is not some deep dive on tariffs. I am not the person to get into the weeds on the microeconomics of that. My knowledge of tariffs probably begins and ends with Ben Stein's lecture in Ferris Bueller's Stay Off. If you are familiar with that movie from almost 40 years ago now, Bueller, anyone? So just wanted to say that it's not going to get into the weeds, and we're talking in general terms about this recent market volatility. So the first thing I want to do is just acknowledge that this is scary, and it's okay to be a little bit scared and have some anxiety about everything that's been going on recently, and the fact that if you have put a lot of your money throughout your clinical career into your 401k, into your profit sharing plan, into different IRAs, and we're planning on using those accounts to fund your post-clinical lifestyle, it can be really scary to log in and see that it's worth 10 or 20% less than it was a few weeks ago, especially when you put a dollar amount to that 10 or 20% loss, whatever you're down. It can be several $100,000, if not more. So it's okay to be a little bit anxious about everything that's going on. That being said, I do want to acknowledge that, but these things happen periodically from time to time. And when I say these things, I just mean that the market takes kind of a nosedive for a period of time. And if you look back through recent history, just my recent history of being alive, I think about the war in Ukraine starting in 2022, that threw the market through a loop. Before that, it was the COVID pandemic in the spring of 2020, where everything really nosedived for a short period of time. Before that, it was the housing bubble crisis in 2007 and 2008, which led to the lost decade for a lot of people my age. And then going way back, I don't really remember this as well because I was just getting out of college and sort of naive, but the dot-com bubble burst in the early 2000s or right around 2000 caused a pretty big market dip in a short period of time. So it's always some headline, some world event that causes it, but they do sort of happen from time to time. So the key, I think, is I know it sounds cliche, but it's true, like a lot of cliches, is just don't panic and make rash decisions about what's going on right now. So with the fact that it's happened so many times and all those examples that I just gave, I think it's probably likely that something like this is going to happen again or happen several different times in your post-clinical life when you retire from dentistry. So the third thing that I would like to offer as a thought is just sort of what is your plan for when this does inevitably happen again, one or more times in your post-clinical life when you're retired from dentistry. Sequence of returns. I know it's sort of a financial planning term, but it's, I'm not going to get into too much here, but that's a big thing when you're looking at the last 5 years before you retire and the first few years after you step away from clinical and start living on your assets. So I think it's important to make sure that in your financial plan, you have somewhere you can go to access money to live off of for a period of time that is not correlated or not related to the stock market or the market broadly speaking. So make sure that this event kind of serves as your reminder that you do need a plan for not, again, another cliche, having your eggs all in one basket. I'm sort of cringing as I say that, but it's true. You got to have a little bit of money outside the market to make sure that you can dip into that when something like this happens. One other thing that I think about, and this didn't occur the first few times that this happened in my lifetime, but now that I've seen it happen several times, I start to think about where is the opportunity when these short-term, hopefully, dives in the market take place. Is it a good time to do a Roth conversion? Is it maybe a good opportunity to do some tax loss harvesting? Is it maybe a chance to take some money that you have sitting on the sidelines, if you want to call it that, in a low interest bearing account and put it in the market now with the assumption that eventually this is all going to recover? There's no guarantee of that, but my thought process is that eventually everything will come back. And one other point that I wanted to make earlier that I did not is that part of being in the market is if it's going to go up, it must go down once in a while. If the market did nothing but go up consistently over long periods of time, like straight up in an arrow, then everyone everywhere would have every last dollar that they owned, excess and what they need to live on, invested in the market because it would be a guaranteed rate of return. It is not a guaranteed rate of return. The price of long-term slow rates of return sometimes is short-term volatility like we are experiencing right now. I just thought of that on the fly. I probably read it somewhere. So if I'm not attributing to that where I need to attribute it, then I apologize. But that just occurred to me as I was sort of doing this podcast in one take. The final thing that I would want to communicate here is that 24 hours of cable news and nonstop social media posts are probably not going to help if you're very anxious about everything that's going on right now. It was occurring to me that when I was a kid, and I think it was called Black Monday in 1987, when that happened, I did not even know about it until like 5:30 that night when Tom Brokaw came on the nightly news and delivered that headline. But now with cable news being in existence and having 24 hours to fill, pick your favorite network. I'm not choosing sides, but they have to talk about something. And so if it's on 24/7, then they've got to fill the time talking about and talking this or any bad headline for that matter into the ground. So that's probably what's going to happen. And if you regularly consume that all day, every day for extended periods of time, I think you can be a little bit more anxious about everything that's going on. Same thing with social media. It often has occurred to me, and let me just say I use social media as much as anyone probably, but it's often occurred to me that when bad things happened 20 or 30 years ago, anywhere in the world, you just didn't always hear about it. Now you've got social media that takes the worst things in the world and sort of accumulates them and puts them 3 inches from your nose all day, every day that you're awake and looking at your phone. So cable news and social media probably are not going to help bring your anxiety level down. There you have it. A few thoughts on the recent market volatility, just to recap. Number one, it is okay to feel anxious and scared because it's not fun to log into your account and see that it's dropped 10 or 15 or 20% at a short period of time. But number two, these things do happen. And if you want to be in the market, then this is kind of part of the deal. Number three is, what is your plan, or start to formulate a plan for when this inevitably happens again somewhere down the road. Number four is looking to see if there's actually an opportunity here over the long term. And the number five is just sort of to maybe tune out as much as you can the news networks and social media where possible. So there you have it. A few thoughts on the recent market volatility. I hope my perspective has helped your perspective on this in some small way. A couple of reminders before I go that dentist exit planning helps dentists leaving clinical within the next 5 years build their financial treatment plan for life after dentistry. And then another reminder that dentist exit planning is a registered investment advisor. The information presented here should not be interpreted as investment, legal, tax, financial planning, or wealth management advice. It's for educational purposes only, and past performance is not indicative of future results. I am Shawn Terrell, and we will talk to you again very soon.